I like how we vibe. I like how we vibe. Yeah. I like how we vibe. Yeah. I like how we vibe. I like how we vibe.
Welcome back to the Compliance Clinic. This week we are literally going to talk about VAT on our Tax Talk Thursday. So it's an introduction to VAT because I feel like VAT is one of those topics that nobody ever speaks about, yet the government expects of you to know of. So yeah, man, let's talk about it. So this is VAT 101, Introduction to VAT. Let's get started. What is VAT? VAT in South Africa is a value-added system that is administered by the South African Revenue Service, which is also known as SARS. VAT is a tax that is charged on supply of goods and services in South Africa, and it is currently levied at 15%. A few years back it was levied at 14%, but right now it's at 15%. So yeah, why does it even exist, guys? VAT is important. It's an important source of revenue for the government of South Africa, and it is used to fund various public services and infrastructure projects. So you see that recently the Minister or Tourism, they tried to pay Tottenham Hotspur like 1 billion. I can't remember. I think it was 1 billion rand or something like that. They were going to use your VAT money to do that. So that's more or less what it does. You know, load shedding, supposed to be using the money from VAT and other taxes to actually fund this. Diesel for the generators that are supposed to be giving us electricity, or coal, buy coal, whatever. But those are some of the things that it gets used for. So that's why it exists. How does it work? The business will charge VAT on supplies of goods and services made by it. On the importation of goods or services, imported services, obviously those are subject to certain conditions. The business will also be entitled to deduct any VAT that it gets charged. So let's say you're in the business of giving consulting services. You consult, you invoice, you charge 10,000 rand, you invoice 10,000 rand plus the 15% VAT on there, which I believe is like what, 11,500 rand. And then you incur office expenses for the month, 5,000 rand. The VAT on that should be about 750 rand. So you would then deduct the 750 from the 1,500. You see, that's how it would work. That's basically how that works. That's like literally a short answer of how it works. Who should register? It is compulsory for business to register for VAT if the value of taxable supplies made to it, so supplies or services made by it or to it, or to be made, let's start again. It is compulsory for business to register for VAT if the value of the taxable supplies made or to be made is in excess of 1 million in any consecutive 12 months. Any consecutive 12 months. You can find that you've got a solid 3 months where you made 300,000 each month, and then you've got the next 9 months where you just made like maybe 20,000, 30,000. You know what I mean? That technically throws you over the 1 million threshold. So you would have to register for VAT. So that's basically what makes it compulsory. But a business may also choose to voluntarily register if the taxable supplies made or to be made is not in excess of 12 million in any consecutive 12 months, but they are looking to, or they've made more than 50,000 rand. So you may have a project that says, look, we need you to be VAT registered, um, you know, and you only have made 50,000 rand. Then you'll register, That's basically how that would work. So yeah, now we know who should register for VAT. There are five categories of voluntary registrations, I guess, but basically here are these categories where you would be choosing to register voluntarily. The first one would apply to a specific business where there is no threshold for the value of the taxable supplies. The second category applies to a business that has made 50,000 in the past period of 12 months. The third category applies to a business where the value of the taxable supplies has not exceeded 50,000, and the condition for registrations are also listed in the regulations. So you could find that you have not made 50,000, but you have signed a contract that is likely to exceed 1 million in the next 12 months. That is essentially one of the listed regulations. The fourth category applies to a business that has acquired a business as a going concern. So you could have acquired a business and the business is over the threshold. Then you can, register from that side. The fifth category applies to a person that carries on a specific nature of activity as listed in the regulation. In addition, there are other general requirements that may also be made for voluntary registration. So this one is it's most of the time they look at voluntary registration. If you have made below 50,000, they look at it very with a microscope, because most people use this as a way of transferring VAT from one company to another and reduce the VAT that is actually payable. So the government tends to keep an eye on it and try and limit the number of people who register for this. So yeah, man, just get that contract, get above 50,000, you good. Trust me. When should payments be made? A business is required to submit VAT returns and make payments on the VAT liabilities or claim VAT refund on or before the 25th day of the last business day or the last business day of the month following the month in which the vendor's tax period ends. That's a mouthful, right? Yeah. Basically, long story short, it's either the 25th or the last day of the month following the month that your tax period ends. So we're going to talk about tax periods after this, you'll see. So all you need to know is that either on the 25th or the last day, depending on what criteria you fall into. And if the 25th day is not a business day, the day for submitting a return and making payment will be the business day preceding such day. Late payment will always be attracting penalty and interest. So late payments, trust me, they will attract penalties and interest. So avoid that, man. Here, the tax period. So let's say you've got category A every 2 calendar months. So which would be which basically category A is January, March, May, July, September, November. So every 2 months, but you obviously start with January. And then the last so for example, let me break it down a little bit more. So let's say category A, the last day of January, meaning the actual periods, the actual 2 months that would actually fall in that January the January cycle would be December and January. So you would actually consider any transaction between December and January as part of your submission for the January submission. And then for March, it would be February and March. You see how that goes. So that's category A. Category B is every 2 calendar months, but this time around it's February, April, June, August, October, December. And obviously, it would be, in this case, for the February period, it would be transactions that happen in January and February. And obviously, for both category A and B, well, for all the categories, you either, right now, I think, for all the categories you that are on this slide, you are going to submit on the 25th of the following month, meaning January, for the January cycle, you would be submitting by the 25th of February, you see. And then for the February cycle in category B, you would be making sure that you submit by the 25th of March. And you would have obviously had paid by the 25th of March. Then category C is every month. Businesses that are likely to exceed revenue of 30 million over 12 months are the ones that fall into category C. So not just about anybody. You must have the big bucks, So yeah. Then you get category D every 6 months. So this is mainly for farmers and will not exceed 1.5 million over 12 months. So category D, you have to, long story short, you're going to have to be a farmer. I think for them it's because of the volume of transactions. I don't think the volume of transactions is so big that they require you to actually register every other day. You know what I mean? Submit returns every other 2 months or every month. So the less volume you have in terms of transactions, the longer SARS gives you, to actually submit. Yeah. And then you get category E, which is every 12 months. This is ideal for trust. There's not a lot of people that have fallen into category E. Once again, it's those who have very little transactions, and which is ideal. Our yesterday's session was actually on trust. So if you check yesterday's episode, you'll see trust, man. Anyway, so that's basically how those categories work. So remember, you have to submit 25th or the last day of the following month of whatever month you've been allocated. You know what I mean? So for category D, if you've been allocated June and December or July and December, is it June and December or July and December? Whichever one it is, guys. I think it's June and December. Then you would submit your returns on the 25th or the last day of July or January, So, and obviously the same with category E. It would have to be wherever you've been allocated, because I think this 12-month calendar depends on when you registered, and also this category D. So category D and E depend when you've registered. So if you registered in March, your 6 months would actually be 6 months from, let's say they say your first month is March. Your 6 months would count from March, So it would be from March until, I think, August, the end of August, and then you would submit in September, and then your next one would start September until the end of February. You'd submit in March. You know what I mean? That's how that 6 month cycle would work. It depends on whichever month you registered. So it's not like a standard 6 months. It actually depends when you registered. And obviously it's the same with category E. It depends on when you registered, So yeah. Conclusion, guys. So overall, VAT plays a very important role in the South African economy, and it is important for businesses to understand and comply with VAT regulations. By doing so, businesses can ensure that they are contributing to the development of South Africa and supporting the country's public infrastructures, as well as the services. I know they may not be what we expect of them, but trust me, it does go a long way, And the other thing is that if it makes you feel any better, VAT starting from this month, I mean, not VAT, income tax starting from this month for businesses has gone down to 27%, and I think VAT was also one of those things that contributed towards this, because It helps reduce the burden on other taxes such as income tax, individuals, as well as businesses. I know it's missing an S there, but it is what it is. We live in an era where typos happen, so just pay your taxes, man, and make sure that you take full advantage of your VAT. Contact us. Anyway, nonetheless, connect with us. The usual spot, the compliance clinic. I see that our Twitter address is incorrect on here. It's actually the Com Clinic ZA. It's not the compliance clinic. Somebody else has the compliance clinic. But I might correct it in the video, or I'll just put the correct one in the description. Nonetheless, we are humans, man. We make errors here and there. So connect with us, man. The compliance clinic on Instagram, the Com Clinic ZA on Twitter, and connect at mcponline.co.za. And remember, love, peace, and prosperity from your favorite practitioner.